Hey, this is Sasha, and welcome to another episode here on Let's Talk Stocks, where I share with you my own knowledge about trading, investing, and options. Now, in today's episode, what we're going to do is we're going to take a look at an Iron Condor adjustment, and we're going to look at that when it comes to rolling an Iron Condor. Before we get there, you have to know and understand, why are you adjusting? What's the point of adjusting? So we're going to cover that first, and then second, I'm going to show you on screen on the trading platform about how to do the adjustment. So let's go first to the paper, and I want to share with you the adjustment, because a lot of people, they want to do adjustment, but they don't really know and understand why. So I'm going to go ahead and draw an Iron Condor here for you, and we're going to go kind of a balanced Iron Condor. I'm going to draw it with two different colors, just so for conversation's sake, we can talk about it. So here on the right, I have a green. On the left, I have a blue. And if you're blue-green colorblind, I truly apologize. Just pretend it's left and right. So if we look at the left side here, when we look at the left side here, we have basically you're selling the, not the calls, but you're selling the puts. And here you're selling the calls. Because with the calls, if you're a seller, it's going on the downside. So now you have this curvature, this line. As it expires, you're making money, so it continues to go higher and higher. So when we look at an adjustment, you have to have a plan in mind. And what's your plan? So let's say your plan is to make $250 on this trade. Now, the most you want to probably lose, because you want probabilities to work in your favor, is, let's say, maybe 400, okay, almost double. Okay, so that's your max loss. So you would probably do the adjustment maybe as this one side starts getting tested somewhere over in these areas. So depending on if you have the right side or the left side getting in trouble, it's probably going to happen when you're down, when you're a little bit at a loss, maybe down about $100, maybe down about $300, maybe not the full 400, but somewhere in this range, you'll probably want to do the adjustment, or somewhere in this range. Now, with the Iron Condor, you probably want to do the adjustment on the downside a little sooner because of the volatilities, because this is negative or short Vega. So you want to be a little more proactive, because you'll lose volatility very quickly as it starts going against you. So in either case, this is where you want to adjust, and you want to adjust so that way you don't hit that max loss as quick. And it gives you time for the theta to continue to work and work and work and work in your favor. So you're trying to hold your position, basically, is the long and the short of it. So when you do this on screen, let me just show you what that kind of looks like. And if we go here on the trading panel, this is Think or Swim, by the way. I'm going to go ahead and set up an Iron Condor on Netflix here. And you're probably going to be watching this further out in time, because I'm pre-recording this. So just look at it in terms of theory and concepts, not exactly as this trade. But here I'll set up kind of a 10-point wide Iron Condor, and let me just look at the probabilities where we are. So I'll go out maybe, let's say, to the 280, and we're 56 days out. You could do it shorter time frame if you want. 280 is probably where I'll do the selling. Let's say 280 by the 270 for protection. So there we go. Make sure we're today, make sure volatility is there. And it's probably going to give me some wacky and weird prices, simply because I'm doing this at 5:30 in the morning here right now. Okay, and I'll move this side a little bit more, let's say 410 and maybe 400. So you can see I'm not quite in the middle, and you could tweak this. Let's say you want to be a little more tweaked. You want to go a little more in the middle, where the Iron Condor is a little bit more balanced. So you could play with it. So let's say I have something like this. Here's my Iron Condor trade and position. So what does really rolling mean? Well, if we go to the paper, all what we're going to do is, depending on which side we're tested on, if we get tested on this side, we go ahead and take off this vertical, and we go ahead and put on a new vertical further out, okay? if we were getting tested here and our problem area is in this side, we take off this vertical and we go ahead and put a new vertical out here, so further out. So all that does is maybe we lose on this side, okay, on this one, but we win on this one. So that's the whole point, is that it gives you time to go ahead and have a winning situation. Now, of course, the other side continues to win more and more. Some people, what they like to do is move also the untested side. So let's say the put side or this left side's getting in trouble. Well, you could go ahead and shift this, but you could also shift this one so inward to make a little more money. But what I found is if a stock is going down and it's going this way on you, sometimes people move that call side and all of a sudden the stock whips back up and now you're inverted where you adjusted a side that was safe and now you got problems on it. So oftentimes what could be another approach is to simply just do the adjustment here, but you could put on a small or tiny little position here still further out. Now it requires a little more capital, but that's another approach that you could do. So let's go back here to the screen. And if we look at this, here's our spread. So let's say with time here's our days that are moving. And this, let's just say, continues to move up on us, and it moves up on us pretty quick, okay? So now we're down about $101. So what do? Well, what we do is we could go ahead and take this 400 and 410 that we have, because remember, these are two verticals. So we take this 400 and 410 and we buy those back. We'll take a little bit of a loss on those, okay? But this is how you would do it, 400 and 410. 400 and 410, so we'll buy a vertical. Okay. And now you'd be left with a spread like this. So now your left side, or the put side, would be making money, okay? But you could go ahead and wait a day or two if you want. But normally I would say go ahead and put it on right away, make the adjustment. So then what we do is we go ahead and I'll analyze the opposite trade. Then we'll sell another vertical now, or a new vertical, a little further out. You could do this 10 points further out. So your initial break even, let me add one slice here, is if we go here and we hide this, here's our initial price. Our initial price where we're kind of right at the edge or break even, okay, right before that peak, I'm going to say is about 398, so about 400, because that's our price right there at the call is 400. So once that's getting closer and closer, you're going to have a problem. So what you can do is buy it back. You take a little bit of a hit on it because you're still going to have time premium in it, but you move it out, so now you can get that spread to go out to about 420. So again, you're not going to get as much for it, and even then, these prices wouldn't be exact right now because we're not in the trade. The stock isn't moving, and remember, as that price gets closer to it, it's going to be worth a little different. So the whole point and concept is that, hey, why don't I take a hit maybe on this one right here? So I take a hit, I buy this back, so I lose once I close this out because of these 400 and 410 problem. And I go ahead and sell a little more premium. So maybe I don't lose a full $1 on the trade, right? Because it's, depending on what you're putting the trade on. But you're looking to make a little bit more money back from the difference of these, or the difference of what you're kind of selling here initially, right? Because you're selling this vertical, you're buying it back, and then what you're going to do again is sell another vertical that's just further out. So it's a basic money management concept to where, hey, I got this much coming in from the put side, I got this much coming in from the call side, but hey, that one is not doing so well. So let me at least get rid of it and see if I can make some money on this other calls, or these other calls, to compensate for the total trade. And that's ultimately what you're doing, is you're just widening from right here. Here was kind of your point, was you're widening from right here, and you're extending this trade all the way to here, giving you a little more time and room for the trade to work. Because remember, eventually, as stocks still stretch to the upside anyways, you'll probably get a pullback soon. So you're giving yourself a little time for that pullback to happen. So that way you become a little more balanced and back into kind of a safer range or region. So that's the basic concept of rolling an Iron Condor, or rolling the trade, or rolling an adjustment. Of course, if you had, let's say, 2 or 3 contracts, you could go ahead and stagger these. So rather than doing 3 and 3, I could go ahead and, so for example, you had 3 contracts. So you go ahead, buy the 3 there. You could go ahead and do only 1 or 2. And I could do the same thing further out, even, let's say, a 430 and a, well, you can't do exactly 430 because you have 1 contract there, but let's say 425 and a 435 right there. So now you're staggering a couple of trades in between. And you could go even a little further. Let's say 435 and maybe 445. So you could do like 1 here, 1 there, and now you get to see exactly kind of what I was looking at was that basically you'd have this kind of stagger effect where your spreads are at different points, but it's still an Iron Condor on the surface and baseline. You're just staggering positions where now you have another one that's even wider. It just really depends how the market's moving, how much risk you want to put on. But really, that's the rolling concept. And the whole point and the reason why you would do this is that let me save myself a little bit, give myself a little bit more time, so that allows the theta to work and the stocks to maybe pull back a bit, so that way I can be more in the sweet spot to collect that theta premium. So I hope this makes a little more sense for you. And if you have other questions, feel free to reach out on our website at tradersfly.com. And make sure to go ahead and subscribe to our YouTube channel by clicking the face icon here, or definitely get on the newsletter list by going here to our website, enter your name and email address when you're there, and you'll get notified if we have any new products, courses, books, or even discounts coming up. And that way you can also get some free training as we release it. Thanks again for joining me. And remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.